Singapore is so often portrayed as an authoritarian and less than democratic state, but so much of its success has been built on exactly what you say, that understanding that the only resource it has is people, and treating that community structure properly is what really has driven the growth here. Having said that, I mean, in terms of your traditional investor perspective and analysis and breakdown of how things go, that focus is not always seen as being the driver of growth. So do you think that investors will be looking at Lawrence Wong's agenda and thinking, OK, Singapore may not be the Southeast Asian market, but we should be looking or prioritising in our plans?
Well, that's an interesting question, because I think amidst all the challenges that we have today, productivity is super important. Productivity to really curb some of the inflationary pressures, as well as the supply chain constraints that we've seen manifest themselves, particularly over 2021. So there's lots of verticals when it comes to our stock market, and it's all those verticals, I think, those different parts of our stock market that have meant we have been the world's strongest developed benchmark across the world. In terms of the emerging markets, that's been our neighbour Indonesia so far this year. Now, when you break down that performance, there's the banks, which have been performed defensively well this year, obviously with the outlook for higher interest rates and expectations for the Fed funds rate to be at 350 to 375 basis points at the end of the year. That's up from where we expected them to be at the end of last year for 2020, up significantly, which obviously supports net interest income. But then you also have the regional growth, which also supports wealth management and non-interest income for the banks. So the banks are a really big part of the STI, which is one reason why it's been so defensive. But I think another interesting aspect of it, and it kind of relates back to what we're talking about in terms of the social compact, is the drive for productivity among the companies here in Singapore. If you look at 5 of our best performing stocks within the STI this year, you've got Singtel, you've got Sembcorp Industries, you've got Singapore Tech Engineering, you've got Keppel Corporation, and also you've got Capitaland Investment. Now, all 5 of those stocks over recent 1 to 2 years have undergone strategic reviews to really restructure themselves and find ways to add shareholder value. So that's where we've seen funds shift in. There's been $1.2 billion Singapore terms of fund inflows into those 5 stocks so far this year that, as we say, are undergoing these strategic reviews, as well as, of course, that diversity that we have in terms of regional exposure. So Jardine Cycle and Carriage, Yangtze Shipbuilding have pretty much been leading the STI, along with Sembcorp Industries so far this year. And, of course, Jardine Cycle and Carriage generates 90% of its revenue to Indonesia, which is seeing consumer confidence at all-time highs.